Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Mark, who is the CEO of Afficiency, which I said correctly, did I not, Mark?
Efficiency with an A.
Yep. Yeah, Efficiency with an A. Thank you for being here, Mark. It's really kind of you. We were just laughing actually off air because I had this sort of elephant in the room thing where I was like, don't call it affinity because that's not it. I did actually have to re-record the start of a podcast 3 times the other day because I couldn't get the name right, which is very embarrassing. So I won't embarrass myself further by explaining what you guys do. Mark, it'd be fabulous if you could start by introducing yourself and what it is that Afficiency do.
Okay, great. Well, first of all, thanks for having me here, Alex. Afficiency. We are a insurtech company. We're based in the US. And what we do is we manufacture completely digital life insurance products that can be purchased in a single sitting, a single session. We put these products on our platform, and then we make them available to the sellers of life insurance. We're innovating the product and the delivery of product and taking friction out of life insurance, and then making that easy for the sellers of life insurance to get their hands on, to white label, and to sell.
Amazing. Brilliant. Life insurance is that, I think everyone talks about insurance products being the things that you pay for but never want to use. Life insurance is the ultimate, but it's so ubiquitous. Why do you think that, you might disagree with this. It feels like it's been quite slow to digitize. It feels like the insurtech's kind of evolution has pushed other areas of insurance faster. I suppose, one, do you think that's fair, or is that just my lack of knowledge? Or if you do agree, why do you think that is?
I do agree. And look, I can talk about the US market. I'm really not knowledgeable beyond the US, but sure. Knowing the US market, it's a very highly regulated. Building a life insurance product is a process. I mean, a typical company, life insurance company might spend 2-3 years doing it because, it's the underwriting, it's the pricing of the products. These are products where the risk you measure over many, many years, right? You can't measure the risk very quickly like you might on another insurance product. And just the disparate technology that's been part of the industry, it's just been very hard to change. And I think it's been difficult, and that's why people have probably ventured into other areas first. So I do agree that this seems to be a laggard in terms of the insurtech innovation. But you know what? We see that as an opportunity, really. Like, the more complex something is, the harder it is to change. And that's great, because if you can figure it out, you're one step ahead of everyone else.
Yeah. Do you think that's something that your background enabled you look at? Because in other areas of, particularly in direct to consumer brands, but small commercial, we've seen lots of entrepreneurs coming in from different sectors. You've obviously got a background in the distribution of life insurance products as your previous career. Do you think it would be very difficult for someone to come into something as complex and as regulated as life? Do you think that's why we've probably seen the kind of less entrance in that?
Yeah, well, I think my perspective here is the entrance that we're seeing, the first entrance, have tried to tackle the distribution, right? So, which is, hey, why don't we take these life insurance products, put them online and put them in an app and just make them more accessible? But it's not as easy as that, right? And I say that because I sort of lived that, right? My background is not in insurance. I was at a credit card business, American Express, for many years, which is building consumer financial products and selling them direct, etc. When I went to the life insurance, what I learned was, you can't just take a traditional life insurance product and throw it online and then make it easily digestible. You got to redesign the product. So what I think has happened, a lot of people immediately have come in and said, great, let's just take this product, put it online. But it's not that easy, because if you're going on, yes, you can quote a product, but then if you're going to put someone through a very lengthy process, and in this country, getting life insurance can take up to a month, right? typically, if you're going to get a meaningful amount of coverage, someone's going to have to come to your house and take blood. And then it's going to have to go to a human underwriter. And that process can take weeks and even months.
Mm.
So by just taking that product and putting it online, yeah, you can get a quote, but have you really re-engineered that process?
Mm.
So that's where I think a lot of people have started. But I think now, and that's where we chose not to go, because, that's also an expensive business, Alex. And especially as more and more people get in, the cost of getting those leads has become very expensive. So
Yes.
our view was, let's just focus on innovating product, and then let's just give it to the people that already know how to sell. And either they're already selling today and we're just making it easier for them, or because of our products, we're open, they've got the customers, and now we're giving them a product that they can actually sell to their customers. So that's sort of how we've approached this. And I feel now more and more energy is moving into the product innovation. I'm seeing that, and I'm seeing all the players in the ecosystem move towards that. The way the reinsurers are looking at things, and the carriers, they're all starting to say, you know what, let's really take a hard look at how our products are and how we price them. So I'm seeing that it was all about distribution, all right? And now I see it moving more towards the product innovation.
It's interesting that, actually, because I can even see that in my own business. So, we're a senior level search business, and we work with insurtechs and startup businesses. And we used to do loads more on partnerships and business development. That was kind of like every day we'd get an inquiry about, do you got anyone that can do partnership roles? Yes. Now we're actually doing loads in the product space. And, recruitment is always a good bellwether for what's happening. It's like, right, that's kind of the evolution. But I also think it's a little bit of I think a lot of the earlier movers on the distribution side were like, oh, insurance is broken. And the irony for me was that they weren't really changing insurance. They were changing the distribution of insurance. It's only when we start to look at product are we truly changing insurance. It's like, what does it look like? Is it fit for purpose? And I think that's really enlightening to me, because the kind of the sizzle didn't match the steak. It was like, oh, we're changing insurance. It's like, no, you're selling traditional insurance products. You're just doing it in a slightly different way. And actually, I don't think anyone was like over the moon with how they bought insurance, but you weren't hugely inconvenienced by it. It's something you had to do, and you only have to do it once a year. So I always think that, like, the inconvenience of buying insurance is like, yes, you need to make that process better. And if you can make it more streamlined, and if I have to answer less questions, I'm happier. But it's also something I only do once a year so it's not that huge of a problem. So it's not like, when you've got Amazon and you want to get things delivered and they've kind of solved that delivery problem for you, that's a massive time save, because there's a huge amount of kind of touch points I have throughout the year. But insurance is different. So yeah, I find it interesting that that's kind of the evolution I've seen in the maturity of insurtech businesses. Tell me about please.
Let me throw in, I'd also say with life, it's actually a bit, I think it's even more challenging, because you don't have to buy it, right? And especially in this country, you don't have to. I know in other markets, you get a house, you get a mortgage, you got to go find it, you got to get it. Mm-hmm. Here you don't. Mm-hmm. So the other challenge is, how do you make it also relevant for consumers? And that means finding distributors that already have those consumers in their ecosystem, and then giving them product that they can see and look at and say, you know what, this is relevant for our consumers. Let's put it in front of our customers. So that's an additional challenge, and it's an additional reason why the product design is so important.
It's interesting on the life side, because you've got very obvious touch points on when people think about buying it. The house usually means you have to. So, like, particularly in the UK, if you've got children, you'll probably want to get some anyway. Outside of those things, those kind of big, obvious kind of movers towards it, it's an interesting product to market, because how do you market it without just being really negative and going, you never know, guys, you never know. I don't know, when's the most appropriate point?
Well, I think you're right. You're right. Those life events are the times that people are really perceptive to this and open to it, and we see data that shows us that. So, for us, it's finding people that live in those ecosystems. But I'll tell you the other way, and this is interesting to us, is and they often say to this country, life insurance is sold, not bought, right? So what we're finding is that the traditional sellers, the agents, the financial advisors, they're the ones that actually do the selling, and it works. And that's traditionally how this business, most of the distribution in this country still works like that. Yeah. And what we found is there's also friction there. So what we've learned is our solution also works in that space, because if you can go to an agent, typically they want to go for the more affluent type customer, because honestly, there's more money to be made there. Yeah. But if you can make products a lot less frictionless and easy, they will go to the people that are being ignored, right? That don't need the huge amounts. So I think that's another thing we've learned. Another entry point is, let's work with the people that know how to sell. And if we take friction out, you know what? They're going to sell more, and they're going to expand the demographic they go to. That's an interesting, we didn't start off thinking that, but we've learned that through our journey.
Mm. Oh, that's interesting. So talk to me about that. Like I'm always interested that, when did you go, coming from like credit cards, when did you go, right, one, we're going to go after life, and two, I suppose why this and why now is always an interesting thing for me.
Well, I mentioned, I went from credit cards to a life insurance company that said, hey, we're going to sell direct. Let's just sell life insurance directly to consumer, which made complete sense, right? It's so obvious. Yeah. And what I'd learned through that experience, and that was really the eye-opener and the catalyst for efficiency, what I learned was the demand was there. That was obvious. People wanted this, and you could see that, right? We were selling a lot of direct to consumer, but I saw that friction point, right? And that was the realization to me that, you can do the marketing and the demand is there, people want it, but until you redesign the product and the process, that's where the trick is. So anyway, that's what sort of got us going, and the idea for efficiency. And initially that was our thought. If we make it so easy, we can go into all these ecosystems that don't sell life insurance and make it easy for them. And we do that, right? But what I was mentioning earlier, what we also learned was, there's demand there from the existing distribution. Yeah. And COVID really brought that to life, because, there was a distributor that we met, and they used to have agents that would go make an appointment, drive, visit someone. They call it knee to knee, sit down across the table, have a consultation, sell life insurance. And with COVID, that finished overnight, done. But within 3 months, they were selling more life insurance than they ever had, because they quickly adapted to Zoom, and they figured, look, this is a lot more efficient for us. And unlike other distributors in that space, they really thrived. And then when we got talking, they're like, hey, if you could give us a product where our agent can literally sit down in 10 minutes, that client can have the insurance policy in their pocket and be covered, and that agent can pick up their commission check the very next day. They're like, that's a game changer. So that was a light bulb moment for us too, right? To say, you know what? It's not just about opening up new distribution and embedding in existing, other platforms. It's, hey, changing the way that the traditional distributors sell and giving them the tools to do that too.
Mm-hmm. Interesting. What's the split of the business now? Now you've had that, is it, are you still more heavily towards a kind of embedded solutions or traditional? Or if you can share that with me, you might be able to.
Yeah, no. I think the mission is still the same, embedded. It's just how do we have maximum flexibility so that we can embed in whatever environment is needed. And the way I look at it with those traditional agents, we're still embedding. Like, they've got their sales process, they got their sales technology that they use. We need to understand, how do they currently sell life insurance, and then we're sort of embedding our solution within their solution. So it's the same principles. It's just teaching us that we just need to focus on having products that are very flexible, and our technology has to be extremely flexible, so we can accommodate any sort of ecosystem. Mm-hmm. That really hasn't changed. In fact, it's actually helped us develop additional tools. For example, traditionally, we make all our products available via API, right? And when we do that, because when we go to certain environments, they control their website, their app, their platform. They want their look and feel, and we want them to keep that. So what we do is we say, look, we will give you the APIs into our life insurance product, and you can design your UX. And that's great. But what this taught us was, some distributors, that's going to take time. for them, or prioritization, or some won't have the skill set to easily do that. So that's where we learn, why don't we start evolving and build some UX ourselves that is highly configurable, so someone can take it off the shelf, they can repurpose it for their environment, and either it's a way for them to get going immediately, or maybe it's a stepping stone. They can start with that as they go and build their own UX. So again, that's something that we learned from that experience I talked about, but it just, I think, strengthens our solution set for all distributors and makes this notion of embedding a bit more flexible.
Something that we've talked about embedded a lot, usually on kind of a P&C type landscape, or personal lines, and one of the things that's come out is like it's kind of defining what we mean by embedded, because it does mean slightly different things to different people. I think a lot of people, when they think of embedded, they like, oh, it's almost closer to traditional affinity products where it's like sold at point of sale as an add-on. How do you define it personally? And I'm interested to see, like, do some of your distribution partners think of it in a different way as well? So have they embedded it at different points of the process?
Yes. So, I think we've expanded our definition, but it is what you said, right? It is what you said. Finding distributors that are selling something else or interacting with the consumer in a different way, and then making it very easy for them to say, oh, by the way, we've also got this solution. So for example, people that are, I'll give you an example. Someone that is servicing someone with a mortgage or giving them a mortgage solution, right? Now that consumer's in that mind space, like you mentioned earlier, of, hey, maybe they just got a new family, maybe they're expanding and they're thinking about life insurance. So that's how we look at it too. So how do we give them a life insurance solution that they can put in their environment, and then there can be a natural conversation of, okay, you got this house, you got this mortgage, what about some life insurance? Here's an option, and you can get it done in the next 10 minutes. So yes, completely we see it that way. So that's, I think, the more traditional way of seeing it. Something we're working on now is, what about for people buying home and auto, right? You bought a home and auto insurance. So let's say you just got auto insurance. Now here's the trick here. You can't, our view is you can't, okay, you just bought some auto insurance. Now you can't send someone through, okay, what about life insurance? You can do that, but it has to be really, really, really simple, right? Yeah. It can't be, well, we're going to send you here and ask you all these questions, because now the consumer's like, well, hang on, I wasn't really looking for this, and now you're going to put me through this whole process. So I think you really, depending on the ecosystem you're in, you really got to tailor the product, to be frank. And that's what we're thinking, and we're working on now. How do we get life products that are so simple, it's almost like a click of a button and you're done, right? And that's what we're working on. So on the spectrum of complex to simple, we're sort of pushing the envelope. On the simple side, we're working on that stuff, like one click of the button, you're done, because then it opens up a lot of these other opportunities where it becomes a purchase of, it's just convenience and happenstance. But we're also working on the other end of the spectrum too, with some of the more, financial products that are a lot more complex. We're also looking to tackle that as well.
On the simple side, is it about, like, how limited can the information be that you require? Like, what's the North Star? Where do you want to get it down to? Like 5 questions, we're done. We can do one, pretty much.
So this is all about risk at the end of the day. And that's really key to how we do things. So look, anyone can, and again, I'll talk about this market here, I'm not familiar with other markets, but anyone can build a life product where you can ask 5 questions and get covered, right? The question is, how expensive is it going to be and how much coverage do you get, right? And where we've pushed the envelope is all our products fit that construct. It has to be instant, and at the end of that conversation, someone has to get insurance policy. But we're pushing the boundaries of price, so it's competitive, and the amount of coverage, like up to $1 million or more. And the way to do that, it's this constant. It's all about the risk. How do we price it? What's the underwriting? And the way we've accomplished that is we've worked very closely with the risk takers, so the reinsurers in particular. We typically start product design with reinsurers. And we use the tools, the latest and greatest tools. So we pull instantly, we'll pull all this data in to make an underwriting decision.
Yeah.
And in this market, things like we pull your prescription history and risk scores and motor vehicle records, we can do all that. But here's what's a bit different. Understanding the distribution plays a big part of the risk for life insurance and for most insurance, but especially for life insurance. You can have the same product, and if you're selling it via different distribution channels, you can have very, very different risk profile. And that can mean the difference between a product bombing and not working and a product working and giving the appropriate profit margins. So we've tackled that. And the way we tackle that is every product that we design, it's not for everyone. Like, we don't just build a product and say, okay, come and get it. We assess every distributor and say, is this the right fit? How does this distribution sell? What sort of audience do they have? And then, so that's a key part of what we do that I think is different. And then secondly, we've got tools to measure that. So we've worked on some proprietary data scoring tools where we can get a measurement of the risk as it comes in and not have to wait for that mortality experience to come through. And that's something that we work with our risk partners and share with them. And having those two extra components allows us to do what I just said, push that envelope and get better pricing, more coverage with that amount of ease. So what I'm talking about, like the symbol click, it's just, it's moving along that same journey, right? But just pushing the envelope further as we show our performance and as we get our risk takers comfortable with our risk tools. And that's what that's about. It's about innovating on the risk as well, not just the convenience, and then pushing the envelope with that. And that's why the data is so important. That's why the data is so important with this and the scoring tools that we've developed.
Yeah. I think there's been a move, and this is in the UK market, but to make life insurance more fun, like, from the branding point of view, it's been quite interesting. And it's been very transparent as well. And I think what they're doing is what a lot of the sort of direct to consumer brands of life insurance in the UK, what they've tried to do is they've made it more fun, but they're selling life insurance to people that previously wouldn't have bought it. But for you and I that probably know more about it, they're actually often quite limited coverage. It's like lump sum and not particularly large lump sums. And they've really simplified the process, but they've really limited basically the payout on that risk. So it's been kind of heralded, in the press, and everyone's kind of excited about it. And I think it's a positive thing. I think it's a hugely positive thing. I think life insurance is on the whole such a positive low-cost investment for most people to kind of look after their families when they're not there, right? And to access people. But it's interesting because it seems like they're working against the traditional distribution models, and therefore they're not offering better products to existing customers or a better process to existing customers. They're offering a new product, simplified, limited for people that have not bought life insurance before. The risk I foresee, though, is that if you really buy into that, you then start looking into it, and then I don't know what they have in terms of a product suite that's suitable for people that buy it more regularly and are a bit more astute with their buying of it. So, but maybe that's part of their plan. I don't know. It's interesting. Something we discussed, you and I didn't, but we discussed with one of your colleagues, was how fast you're able to launch new products. Why do you think that? Why do you think that is? And is it structural? Is it cultural? What is it about you guys that you're able to kind of do such good speed to market on your new products?
Yeah, no, it's a great question. First of all, I'll tell you why that's so important to us, because that's central to our business model, right? Like I said, we're all about innovating the product, and our belief then becomes, hey, if we're going to win in this space and really innovate, you got to be quick. Because I think I mentioned to you, traditionally, it might take 2 years to build a product with a life insurance company. And then I'll tell you, well, that's a problem, because you may build a product and maybe it doesn't work. And now what do? So by design, we have to have the ability to build product quickly and do lots of it and be able to tailor it quickly, because that's how we're going to figure out what really works, and we're really going to innovate, right? So that's why it's central. How do we do it, to your question? I think there's two parts to that. One is really understanding how to build life insurance product. Like, forget about the technology.
Yeah.
How do you design and build a product? And we have that expertise. And I think that's sort of, we started with that. So knowing how to, for example, sit down with actuaries and reinsurers and price a product, knowing how to do automatic underwriting, right? We come with that solution. We sit down and say, here is our underwriting manual. Here are all the tools and all the data that we bring in, having the expertise around that. Understanding the regulatory process, right? In this country, you build a life insurance product, it has to be filed with 50 states, the Department of Insurance.
Yeah.
So knowing how to build the product, define the product, and then be able to bring it to the regulators is an important component. So that whole piece is really, really important. And that's what we're good at, right? So we don't go to life insurance companies and say, hey, we've got an idea for a product, let's work together and build it. We go to a life insurance company, and I can talk about that later, we've got a nice stable of them, and say, we've already designed the product. Here it is. Here are all the forms that we need to file. Here's the pricing. Here's the underwriting manual. Here's our reinsurance partner that's willing to, take risk on this, depending as much as you're willing to cede. So that's one key important for speed, right? Because now you've short-circuited that process that can typically take that design process that can take a long time, because there's many different stakeholders in an insurance company that need to be involved in that. So one piece, short-circuiting that by doing all the heavy lifting. The second piece is technology, because you can design a product. And by the way, that first piece is what we found is that takes more time than the actual technology. Yeah. The second piece is we have invested in our platform so that we can easily onboard product. So when I worked for that insurance company I mentioned, if you wanted to change the price of a life insurance product, that was a $500,000 investment, and it took 3 months, because you had all these maybe 20 different technology systems you had to update, right? We've built a platform. We've got one platform that does the full value chain, from doing a quote to doing an application, having an underwriting decision, taking payment, generating the policy pack that goes to the consumer, putting into the administration system. So we've focused so much on building that platform, and then on how we can easily put the product onto that platform. So if we can short circuit the design, which we're good at, and then we've got a platform where we can easily put it on and activate the product, that's how we solve what you asked for. That's how we get the speed to do the product innovation. And look, it's a luxury of being a startup and having a blank piece of paper and being able to design something from scratch, which we did. But I'll tell you, we're already on our second generation of that now. So we've learned our lessons, and our next generation, we'll be able to onboard product pretty much without even coding, like, very low code, rapidly putting product onto our platform.
Yeah, that's exciting. Because I was going to ask you, how do you think that's going to be impacted as you scale? Because there's a lot of things that as a startup business, actually you're able to do quicker, just because everyone talks about legacy, and of course legacy systems, all that sort of stuff, but there's culturally and just physically, there's less people. I'm sure you're not in a room these days, but there's less kind of like decision makers required to get around the table, right? Then as you scale, how do you keep that speed going? But I suppose you're winning already because you've got that iteration of code that you don't need to do. You kind of get in a low code environment. But can you see some challenges as you grow to kind of keep that speed? Is the bottlenecks will be created?
Yeah, well, look, I think that is the challenge, startup challenge as you grow, getting to that next level of growth. How do you maintain the energy, the speed of decision making while having to grow a team, right? By force, it's going to be impossible to do things as you were when you're a much smaller team. So honestly, that's the biggest challenge I see for us right now, is how do we grow, which we're rapidly hiring now, but then how do we build that right culture to preserve all of that? So that, I think a lot about that right now, because that's the trick. How do we keep that secret sauce and not dilute it as we grow? I think the other piece, which is really key, is the partnerships we have. So we've got some great carrier partners, and honestly, we've built some trust with them because we can come to them and say, here's this product, we've done all the heavy lifting. If there's not the trust there, you're not going to get anywhere. So, that takes time to build, and we've done that with the products we've already built. But that's another key ingredient there, building, having the right risk-taking partners. And we've put, we're bearing the fruit of that now, having really worked on that for the last 2 or 3 years.
What do you look for in those relationships? What makes a good relationship for a carrier partner?
First of all, they have to be on the same wavelength. Philosophically, they have to completely be on board with what we're doing. I mentioned the instant decisioning, the way we look at risk, pushing the envelope, being comfortable with how we're balancing the underwriting and the pricing. We have to be completely on the same page there. And then the carrier has to be on the same page with what they're bringing to the table and what we're bringing to the table. Because what we're saying is we're doing all the heavy lifting on the technology, on the operational stuff, and they've got to be comfortable with that. So that's really key. And at the end of the day, if you go to a life insurance company, it's not just about, you can go to the CEO and the CEO can say, great, let's do it. But, unless you've got the head of the actuaries, right? The people that do the underwriting, the people that run the distribution, the technology, unless all those stakeholders are on the same page as us, it ain't going to work, right? So that's what's key. What's key is they're on the same philosophy. They understand what we're doing. They know they're comfortable letting us do what we do well. And we go into the journey together with that understanding. That's key. If we don't have that, that relationship will not work.
Because I imagine one of the challenges for you is exactly that. Your speed to market strategy being that you do all this work up front. It's no good if you rock up and go, look, we've created the product. Basically, this is ready to go. You just need to kind of agree. If they're going to go, no, we need to take this away for 6 months, look at it ourselves, basically repeat your homework. So it's interesting. I know, I talking to one of your colleagues, they were telling me that you, just before launch, you had a kind of last minute capacity provider pull out. I hope I'm not sharing tales out of school. Or if that's true, or my notes are wrong, but did that happen or?
Yeah, I think maybe that was, yes, but that was early days for us.
Really early. The reason I asked, because I wanted to sort of your approach to adversity, because
that's
guys. So I kind of wanted to sort of, just that founder journey of going, you've done all this work and you've got your carrier partner, and then they go, yeah, we're going to pull out the process. Like, how do you tackle that?
Yeah, I got a great example. We built our first product, right? The first product we ever built. We had a relationship with a carrier. They're like, this vision sounds great, let's do it. And it was awesome, right? That was a big break for us. As it's like moving from the PowerPoint vision to, okay, let's do something here. And we built a product, and they were really happy, and we went live. And like 2 weeks in, the carrier comes to us and says, we just found out our corporate owners are shutting down the life insurance business.
Wow.
So we're like, what? We just did all this work, and we're all excited. We're starting to sell. And now it's like, they're getting out of the business. So yeah, that's a real moment, right? Like, of holy crap, what the hell do we do now? And someone once told me, hey, you're going to have this existential moments with a startup. That was the first one. And it was right, it happened. But you know what? It's like, and you got to have a thick skin here, and you got to expect it, by the way. Stuff like this is going to happen. It's not going to be good news all the time. And I think you just got to have the willpower to break through it. Like, okay, and look at it as an opportunity. So, hey, we built something really cool. And now it wasn't just a vision on a PowerPoint. We actually did it, right? So we quickly pivoted over, and, by force of will, found 3 other carriers that were interested in what we were doing.
Yeah.
Right? So I think a lot of it's about attitude, right? And you got to have that attitude. It's a roller coaster, and there's no way around it. It's going to be days where it's like, man, this is great. It's just like we thought. And other days where it's, holy crap, this is, is going to be bad. But now, honestly, when that happens, it doesn't really worry me anymore because it's just expected. It's like, okay, how are we going to solve it? Like, you got to go in with the attitude, everything is completely solvable. We just got to figure out how to do it. That's an important ingredient, I feel, if you're gonna be in this business.
I think that's entrepreneurship in a nutshell. I had a conversation with Sophie, my colleague, earlier, and we'd had a bit of basically bad news on we're trying to build some products outside of kind of traditional sort of recruitment, and we'd had some bad news, and I just said to her, I said, look, on everything, I want the bad news first, because like we get the bad news first, and it's like, right, what is it? How bad is it? And what are we going to do about it? The good stuff's kind of, you need to celebrate it, because otherwise what's the point? But at the same time, it's like, you kind of got to go, well, that's good, that went as we hoped it would, and sort of move on, really.
I hear, it's sort of perverse, because like all the good stuff happens and everyone's like, oh, that's great, and you find yourself not actually celebrating it, because you're like, oh, I'm already past that. That's great. It happened as planned. Like, it's not as exciting as it probably should be, because you're always straight on to the next thing.
Yeah, no, which is the same, but you get to look back, and if you do it right and you get your exit, you get to look back then, right? That's when you.
Well, that's the thing, right? Like, hopefully, I could just save it all up for then, and then have a massive sigh of relief.
I've got one last question, really. I suppose I think the way that you talked about your partners in such glowing terms, I probably know why this is. But did you ever consider, or would you ever consider doing a sort of full stack solution? And was it something you thought about?
Yeah, I thought about it, but thought about it, but here's how and it wasn't much of a thought, because when you think about that, okay, do we become a life insurance company, and why? So really, three things: the paper, the insurance licenses, and the solvency capital. But we're not really innovating any of those pieces, right? Like those are necessary pieces. So our view is, let's just partner with the carriers that provide us that. Now, look, it's a lift up front to do that. Now, the alternative view is, why don't we just do that ourselves? But our view was, look, if we do that, that is going to suck up so much energy from us, like figuring out how to be a life insurance company. All the energy and the hurdles to figure that out would just suck up what we should be focused on, which is where the innovation is, right? So that's why we've sort of looked at it and said, why would we want to do that? It's just going to distract us. And if we can get the benefits of that through the partnerships, we're okay. So that's how we've felt about that. Now, look, it's an investment. Like, you could say, there's still friction with the carriers, but we build those relationships. And look, we're not in the business to go and say, let's have every carrier in the world sign up with us. We just need a handful of good partners, and that's been our approach. And if we can accomplish that, that other thing, it might be appealing to look at, but we feel it would just sort of knock us off course.
Yeah, I mean, I agree. I think some of the stuff about wanting to be full stack it's not driven by the kind of financials. It's driven by the ego. It's like, I want to be the the full stack, and I think a little bit sometimes comes from the misunderstanding of one, the scale of that challenge, or maybe that's maybe that's not fair to say. Maybe people do understand the scale of the challenge, but there's so many good businesses to build where you focus on the bit that you're good at. I apologize. I mean, it won't mean anything to someone who's listening to this, but my camera keeps turning off and on, so I keep leaving Mark alone on the screen. But Mark, I think that's a sort of really interesting point to come to sort of the conclusion. But I did want to ask you about 2022. We're sort of coming into the second quarter. Any kind of exciting developments that you can let people be aware of? Is this sort of growth things that are happening?
Yeah, I'd say three things. New products, right? I've done all this talking about how we've really invested in doing product. Well, we're doing it, right? So we've got, like, I think 4 or 5 products we're working on that we're really excited about. Next layer of our capabilities, so we're investing in, and that's more about our distributors, making it even easier for them to get their hands on our product. So I mentioned building we're just building tools to make it even easier for them to sort of take product and get them onto their ecosystem. So that's where we're really investing our energy. And part of that is when we do these new products, we'll bring in distribution with us. So now we've started to learn, hey, if there's a distributor, let's bring them as part of the journey, because ultimately, if they're going to sell it, let's bring them into the conversation, the product design, and you got a much better chance once it goes live, then they can straight out the gates do very well. So that's what we're focused on. But to make all that happen, it's building a team, right? I think I talked about that earlier.
Sure.
We have a lot of, like, 5 products is a lot, and the capabilities we're doing are a lot. The good news is we know what we're going to do. We're not scratching our head trying to figure it out, but building the team rapidly, that's the thing that we're going to be focused on in the next 6 months. And that's going to be, that's the next challenge I'm taking on.
Yeah, sure. Can't believe we've left on that cliffhanger. That's my favourite topic. But but I won't bore everyone about recruitment. But look, Mark, you've been really generous with your time. Super interesting conversation. Thank you so much. And really excited to see what you guys keep doing. So thank you once again for being a guest on the podcast.
Alex, great being with you, and thank you for having me here.
Thank you.